Basically, thank you so much, everybody, for coming. You guys have made my whole year. This has been such a pleasure to actually create, and I'm really, really excited about it. But this is not about me. It's about Ngozi, who I'm about to introduce. And if people think I'm a powerhouse, you need to hear this lady speak. Ms. Bell is a corporate strategist with vast transatlantic experience. She launched her career in telecommunications with AT&T and agri-systems. And today she specializes in venture capital strategies, technology strategies, and new business development, business growth, and rescue. As Region 3 advocate for the U.S. Small Business Administration, Mid-Atlantic region during the Barack Obama administration, Ngozi served as a direct link between small business owners and state and local government agencies, legislators, and the Office of Advocacy of the SBA. Ngozi is the co-founder as well of the African Leadership Alliance and a board member of the Lincoln Leadership Academy, the Women Empowerment Project, and also the Association of African NGOs. Prior to public service, Ngozi was the vice president of Richmond Ventures, an early-stage venture capital firm with $250 million under management. There she excelled at fundraising, deal sourcing, market and product analysis, and portfolio management. She was the point person for the communications technology and new partner engagement analysis of core technology sectors. And today she'll be doing the keynote address, speaking about venture capital and investing in Africa. Thank you so much, and Ngozi Bell, I welcome you on the stage.
So first, I just want to say, Gigi, thank you so much. Sometimes when people introduce you, you can't recognize yourself. Like, who's that? Is it okay if I close this? I think it's just. So first, I just want to say good afternoon to everybody, right? And Gigi, thank you so much for planning this. I would really be amiss if I also don't say thank you to my friend Dr. Chinwe, who has connected me to a whole host of people. I got great support from the people that Gigi put together. And yesterday I was actually honored to speak at the Eye on Africa. Should I put this back up? You guys prefer that? Maybe so that you're not having to see it live.
No, it's okay.
So yesterday I was honored to really speak at the Eye on Africa forum, specifically looking at 3 key entrepreneurial pillars that my research and work show to be core differentiators. But one of the things that I really want to harp on is that there's an African way, right? I mean, I mentioned Chinwe. Chinwe introduced me to Gigi. She introduced me to another lady called Awa who runs that program. So through one contact, I had 3 expansions. That's the African way. You know, that just told me something about how significant Africans think and the type of relational connectivity that we make. So that's the first thing I want to bring to your attention, is that there is an African way for the way we engage, for engagement. So now, I also do want to mention this amazing university. I learned quite a bit about MSU. The MSU has the largest history department in the country. The MSU has the largest African American Studies organization in the country. And one of the things that makes me really proud is this was one of the first institutions to reach out to Nigerian institutions. They've worked with one of our flagship universities in Nigeria called Nsukka to help them start. So there's a lot of great legacy in this place. So I'm really honored to be here today. So in my talk yesterday, I mentioned 3 key entrepreneurial pillars that my research and work showed to be core differentiators for Africa. And those 3 things were, you know, the opportunity, availability, and I think it's so important for people to say, what's the real opportunity that's available in Africa? The second thing was exploiting the culture of the African markets. You see, the African market is not generic, right? There's something very specific about the African market. There's a way that Africans relate when they engage. There's the need for this communal type of trust that is formed by understanding what we're trying to get across to them, right? So understanding that helps the entrepreneurial engagement with Africa. And the third thing was the rapid necessity to indigenize technology that comes into Africa, right? You can't take technology from the US and sort of throw it over the wall and say, hey guys, use it. It's a whole different type of mindset that's required. So I talked about that yesterday. And so today I'm going to sort of follow on some of those conversations and elaborate that for you. So my topic, a mouthful, is the near future profitability, creating the experiences for rapid advancement of Africa. And I'm going to tie that to the role that an investor plays, the private investor. What's the role they play with respect to the engagement of Africa? And so my goal is that at the end of this talk, I will be making the case for the most suitable investment process for Africa. I believe, though, that we always have to start with history, right? Because when the story of Africa is told, it always appears like it just started now. Everybody has an opinion on Africa. But quite honestly, Africa has had a history that is longer than any other country on the planet, any other continent. And if we don't take into consideration that history, we miss the mark. We actually miss the mark. So, if you would just indulge me, I will take you on a long historical journey because I think it's worth it and I think it's necessary, right? So, like I said, Africa is the longest and oldest economy historically. And the fact that if Africa did it before, it'll do it again. It'll be different this time, but it will do it again. So let's just walk through some of Africa's ancient economic history. First thing I wanted to ask you is, did you know that dating back to the 5200 BC and beyond, Africa engaged in trade, built successful cities, and developed technology? Did you know that a great deal of the vibrant trade was both intra-Africa, so you had the Nubians of Sudan and Ethiopia, the Kush, and traded across the Indian Ocean with China, with Southeast Asia, and with the Arabian Peninsula. They traded on iron, on gold, on peas, sorghum, millet, complex trade. Between 4000 BC and late 19th century, they had kingdoms like Mali, Kanem Borno, Songhai, Somalia, the Aksumite Kingdom, which was Ethiopia plus Eritrea, Benin, Yoruba, Ghana, highly developed, highly functional kingdoms. These kingdoms traded cloth, kola nuts, iron, salt. They created currencies of seashells, gold bars, iron bars, copper bars. It's not new, guys. It's not new for Africa. Aksumite had a powerful navy. That's Ethiopia. Had a powerful navy that reached the Byzantine Empire. They reached India, the kingdom of Ashur, the Sultanate, which is today's Somalia, developed hydraulic engineering and a new system for agriculture and for taxation that was used till late 19th century. History. Unfortunately, though, through transatlantic slave trade and colonization, Africa's trade, development, and technology competences became muted. By the time independence rolled around, Africa was saddled with debt and serviced it in part by converting to a no-value-add, materials, extractive, lopsided trading economy. That's what happened. So check this out. This was something I actually found really interesting when I was doing my research. So the UN Conference on Trade and Development, UNCTAD, estimated that between 1970 and 2002, sub-Saharan Africa received $294 billion, which was IMF and World Bank loans, They paid out $268 billion and they still owed $300 billion. Depending on where you are on that side of math, it's either horrible or it's amazing math. Right? So it's pretty interesting. So it just gives you a sense. So eventually Africa folded, exasperated by great loss, saddled with great debt, abused by bad governance, and decimated by corruption. This is the Africa that later African generations were introduced to. This is the Africa that the world learned to despise. So just take a minute and think about the history and where it got to. Because many times we start from the Africa the world despised. We don't go back to the Africa that helped create a lot of what the world enjoys. It's really, really important to connect those dots. So I want to talk about something else that is very interesting, because one of the things that Africa is also known for is that we're not a united people, right? So let's talk about unity a little bit, the history of unity. In pre-colonial Africa, unity was enabled by trade. So pre-colonial Africa, of course, was heterogeneous and ethnic, right? On one extreme, there were states with centralized administrations and hierarchical organizations, so with like the Songhai Empire in Western Africa, the Luba Kingdom in Central Africa, and the kingdoms of Buganda and Ankole in Eastern Africa. And by the way, the kingdom of Buganda is still intact today, it's still recognized in Uganda. At the other extreme were acephalous societies with no central leadership. If you're Igbo, we say Iwe Nweze, which means the Igbo person doesn't have a king. So groups without political organizations beyond the village level, such as the Nuer in Sudan, the Konkoba in Ghana, and the Togo and the Igbo of Arab. I'm from the Igbo tribe, by the way. The middle of the spectrum was characterized by societies organized in large chiefdoms and loose alliances, such as the Ewe and the Wolof in Western Africa. The thing, though, is that they had very effective conflict resolution and decision-making mechanisms. And though their communities were diverse formats, they found ways to partner because of trade. They found ways to have a common vision because of trade. So let's look at Africa in the colonial Africa and the unity that came through the struggle against colonization. So again, unity came through colonization. So in 1958 marked the Pan-African Freedom Movement of Eastern Central Africa. Their goal was really to rid dependent territories of imperialism and white supremacy. That was the uniting call. In 1961, we had the split to two independent feuding states. We had the Casablanca and then the Monrovia, but they still remained united because they were both against apartheid, they were both against colonization. So by 1963, they set aside their discord, came together and formed the OAU. That's African unity. That's the history that Africa actually has. So let's look at post-colonial and independent Africa, beginning of that. So let's just listen to some of what happened. So as Africans, started gaining independence, the focus was now turned to limit the role of ethnic institutions so that power can be consolidated to the capitals and unity can be forced. So this was some of what the colonial masters were trying to do real quickly because independence was in the air. They encountered some big issues. The inability to provide public goods that reached everyone provided a barrier, and also it was so hard to broadcast the power base from any central capital back into the regional capital. So they had to turn away from that and pretty much invite those regional chiefdoms to be part of it. So countries like Nigeria, Niger, Mozambique, Mauritania were some of those places where it was impossible to literally try to force a unity that was not based on anything that was convenient for the people. But eventually what happened is that Africa was left as a largely incoherent 54 demarcations of lopsided dependency on foreign engagements. Ladies and gentlemen, that's Africa's story. That's where some of this stuff happened. And if we don't take the time to understand that, then we will all be trying to solve Africa's problem without really understanding the history of the people. And it's so important that we do that. So what we see from history is that trade and stability have always been Africa's currency to success. It can be again, and that's what I'm about to tell you going forward. So there's a formula for Africa to return to success, and I believe that that formula is in trade and it's also in unity. The thing though is that for success outcome to be accelerated, the formula for Africa economic development and unity must be curated for Africa. It cannot be imported. We've tried it so many times and it's failed. It just cannot be imported. So let's quickly recount some of the good progress, and from a lot of the amazing speakers today, I really enjoyed a lot of the speaking. Cordell was amazing. Your name is amazing, W.E. That's right. But some of the talks today were just amazing. Victor and certainly Grace, really important conversation. And we've heard some of the statistics, so I'm just going to run through them really quickly. But it just gives us a foundation of some of what's happened, and I'll talk about the good and the bad. One is, Africa is the second largest continent, right? 20% of the landmass. That means 3 Chinas can fit in Africa. 2.5 US can fit in Africa. That's a big deal. That's a big deal when you talk about what we can use land to do. Okay. So 80 to 90% of the Earth's platinum is in Africa. 10% of its oil. In fact, today it's gone up to about 13% because they keep finding new oil sources. By 2020, the 1.3 billion people will become 19% of the world population and potential to contribute 50% of its young workforce. Potential. Africa's GDP went from 1.6 trillion in 2013 to 3.3 trillion in 2017. And if you follow that trajectory, it has the potential to go to 29 trillion by 2050. Now, it's going to take a lot of work to get there. But when you look at the growth rate of other countries within that same period, it's actually impressive. Now, what it needs to do to accommodate the population is a whole different story. But we need to think of things in context. Because when you look at things in context, I think that you begin to create solutions in context. Right? 128 million households spend $1.4 trillion. So if you were a business person, do the math. That's about $11,000 per household. If we targeted resources that were best suited for those households, that's a big deal. That's a big deal in terms of growth. And then, of course, it's gained some impressive global competitive capacity with companies like Andela, Flutterwave, M-Pesa, everybody talks about M-Pesa, V-Connect, Printivo, Ways to Go, and a company I really like personally, the Sun Exchange, right? That's doing some things on solar energy. And of course, Jumia. And I want to say something really personal about Jumia. So Jumia is a company that really went after the e-commerce and got themselves to the point where they could go IPO. So a bunch of us were pretty proud, right? An African country going IPO on the New York Stock Exchange, that's a big deal, right? That's a big deal. And Jumia goes IPO, and that's some of the reason why I decided to make this talk about history, because what history tells us is that Africans and Africa are not trustworthy. So once you interject that into the mindset of people, you immediately make it hard to do business with Africans. So Andrew left. How many of you know Andrew left of Citron? He's a short seller. So if you do any kind of stocks, you will know Andrew. So Andrew left, comes out and talks trash about Jumia. He literally calls them not trustworthy. He literally says they're fraudulent. And do you know what he does to the stock market? A stock that was supposed to probably hit about $60 to $70. If you follow Alibaba, that's what Jumia is supposed to do. The last time I checked, $7. So the narrative against Africa, when we keep repeating it, when we keep letting people repeat it, when we don't teach them the history of Africa, hurts Africa. It's one of the biggest things that we have a responsibility to change. So then Africa showed leadership in mobile money in the fintech space. I think Cordell spoke about, this is one space that we've seen leadership. We have a company that is part of our portfolio called Minds.io, and Minds.io's solution to give capital access to the underbanked and the unbanked, creating this ability or this democratization of capital that is so important for commerce, was an amazing hit. Nigerian guys came out of Stanford. We made them move to Nigeria and done a great work, established some banks. It was not easy. It was not easy, but the beauty of Africa is that the access, if you have something to sell, the access is incredible. You are engaging CBN governor. You are engaging, I don't know how many people in this country can talk to the central bank governor. But in Africa, if you have the right thing and you have the right engagement, you can actually get to the people who make the decisions. Because we all have to admit, it's sort of a top-down decision process. But you get that access. And they've done the, and today, they're able to service about 6 million loans a month. And check this out. When we look at fail rates, in terms of banks, right, where people don't repay their loans, we've had 0. We actually had to rig the system to see what happens when somebody does not pay back. So the very people that you would like to look down on and say they are unlikely to be one of the best customers. So if we can unleash that shadow economy, it's a real game changer. And using technology to do that has been so critical, because with their technology, we're forming this critical identification for a lot of these participants, so that they can go ahead and get insurance, get mortgages. So you see how you start to change, you start to affect the pyramid from the bottoms up, right, using technology. So those are the kind of things that we're seeing that happening. The other thing is, Africans young with training could be the most formidable asset, because there's a growing category of young problem solvers. And I did a TEDx talk on Africa being the young problem solvers that will solve tomorrow's global problems. Because a lot of the problems in Africa are global problems. Go to Indonesia, go to parts of India, go to parts of China. I lived in China, and I've been to the good and the bad. I've been in Shenzhen, where it's really cool, but I've been in other cities where it's really scary. So there is value to the learnings that our African brothers and sisters are having. And then, of course, some of what regulations are doing that promote local content and participation with effective PPP. So now, with a lot of this public-private partnership, what some countries are doing is that the contribution of the African state might be the land, it might be regulatory help, it might be tax incentives, and that makes the PPP process a lot tighter, where you don't have some foreign company come in, develop it, and then own it. No one gains from it, and for years it's a foreign product, and you're paying taxes, you're paying tolls, you're doing all that. So this kind of awakening is beginning to happen. But I'll tell you some of the issues that still persist. And like I said, a lot of the speakers have talked about them, but they're just some that really tug at my heart. One is access to anything from healthcare to education to adequate commodities like food, shelter, energy, and water is still sporadic. It's terrible, but it's also an opportunity. In most African countries, there is no coherent tax base to properly fund any kind of sustainable development. Many parts of Africa are still riddled with corruption and poor governance structures. Poverty still prevails in many parts due to the lack of basic amenities. Domestic terrorism continues to create instability, and persistent high unemployment is really at dangerous odds with this ever-growing young population that we're going to have, right? So it absolutely has a share of problems. So you see, the successes are real and important, but they exist in small pockets. They're zoned away in regions, some are not rapidly repeatable, and many are not fastidiously sustainable. So to achieve an Africa that would have rapid fire economic success and that can leverage its massive size, exploit its long market, and stand the test of time, it has to have two ingredients. And I've said that one is a new unity order and a private capital investment that is not the same as what the rest of the world thinks it needs to be. Africa actually needs what I call patient, resilient, contextualized capital. Right? And I'll pack that a little bit. So in terms of a new unity order, I believe that Africa now has one. I believe that the African Continental Free Trade Agreement that Nigeria just happily signed after holding out for a long time is that vehicle, is an important step to that. I believe it can do it, but it has to be effective and it has to be non-leaky. In December, I did a talk here at Yale where I really unpacked what non-leaky trade agreement looks like. And part of it is, I think that some form of a single currency is extremely necessary. And I'm a fan of IDLT, the immutable ledger technology, distributed ledger technology. Most of us know it as blockchain. But that technology is, in my opinion, the internet of our day. And its capacity and its capability is groundbreaking. And yet, it's not that easy. It's not that difficult to implement. So I think that's where some of the game changer opportunities, right? And of course, creating these payment gateways, not having an ID to go from one country to the other or needing a visa, that's just ridiculous. So taking care of those things, creating like an EU-like environment that allows us to take advantage of that market. We're talking about 1 billion people market. That's a China, right? When you think about it, how do we exploit that? So I think what has just happened, some people, Africans have become very cynical and for good reason, but I think that we must be optimistic. We must keep hope alive. And so I'm rooting for the Africa Continental Free Trade Agreement to be successful because it would be a game changer if it's successful, right? The second part of, the second thing I believe that Africa has to do with this need for capital, but a very specific type of capital. So let's just tell a story. There were just recently, between 2012 and maybe 2017, there was plenty of excitement. Large investors were coming into Africa, right? And were brandishing these multi-billion-dollar funds. And unfortunately, many of them turned out to be mostly unproductive. So between 2007 actually and 2014, about 30 billion private equity investment was targeted to reach Africa. Everyone was excited. People now have noticed Africa. They're going to know that we're cool too, and we're an important market. They're going to have to deal with us. We're a force. I mean, people were really excited that Africa was going to change, just like that, So that's the way it seemed. But here's what actually happened. By 2014, Blackstone that acquired Black Rhino, and the goal there was to invest $1 billion in the energy sector, in the infrastructure project sector in Ethiopia and Nigeria. 2017, by 2017, they had not closed any single deal, and they quickly started to divest themselves to run out. By early 2017, 90% of Africa-focused private equity funds were $100 million and more. Meanwhile, the companies in Africa, for the most part, majority of them are below $100 million. So that's a mismatch. That's a mismatch. And that's why I talk about history. You kind of have to take the time to say, if I'm going to marry you, let me get to know you a little better, right? I know there are TV shows where you meet people and just get married, but realistically, that's not how it happens in real life, right? So KKR, right, again, another big private equity firm. By the way, I love these guys, right? But I'm talking about them in the context of Africa. They disbanded after one investment. They did a $200 million investment in AfriFlower to cultivate roses. They sold it, they ran away. Carlisle closed their $698 million Africa fund. They did one investment, $147 million with Diamond Bank. 90% of that fell. They ran away.
Still there.
In 2015, private equity investments peaked at about $4.7 billion. By 2016, it had fallen to $2.3 billion. By 2017, $0.7 billion. So the question becomes why, right? Now, in all honesty, it wasn't just Africa. Investors were having a little bit of a change of mind on these developing countries, and most of them went back to what they were comfortable with. So China got a really big boost, while a lot of the developing countries actually went down in terms of investment. So it wasn't just Africa, it was sort of the water. Something was in the water at that point. But I have a theory, right? And it's a perspective, right? Why did these PE engagements do poorly when all that money was available? And here's my perspective, right? I believe that the initial droves of investors, not all of them, but many of them, approach Africa with the same extractive mindset that Africa has always been engaged. You know, you insert big money, you buy it all, you exploit it for spectacular returns, and you're immune to any domestic impact. So you go, you buy, take your stuff, you run. Same thing that happened with a lot of the raw materials that come out of Africa, where we had foreigners literally owning the wealth of the country. I think it was the same mindset that a lot of these big firms went into. And to be honest, I've been in the VC world for quite a while, and we're not big. Birchmere was $250 million under management. When I met one of the partners at Kleiner Perkins, I was asking him, I said, how did you guys decide on Google, and why did you make that decision? And he said, literally it was like throwing darts, that they invested in 200 search engines, but that when Google hit, it returned the portfolio 10 times. You see, we couldn't do that because we're a smaller portfolio. So money can do a lot for you, but money has to be right-sized, right? The right kind of money has to chase the right kind of investment, right? So even in the US, there are not that many $100 million deals, right? Except in drug development, energy projects. But when you start looking at, or if you're in private equity mezzanine, where you're doing some of the larger type of established businesses, but if you start looking at startups, you know, Series A, $2 million, sometimes a Series A investment might be $1.5 million. By the time you get to Series C, that's where you're looking at $10 million and all that. So it was a little bit disingenuous to my point is, when you bring that money, what were you coming to buy? You were coming to buy a piece of the country, so to speak. Yeah, that's the way I see it. So a strategy that once worked in early post-colonial Africa now failed spectacularly. And I believe that is because Africa had done a few things differently. For example, to own a natural resource like an oil well in Nigeria, there has to be significant local participation. That's a new change. There are now regulations that require local content for solution deployment. That's another new change. And then, of course, I talked about PPP, BOT, BOOT. These are buy, own, transfer, or buy, own, operate, transfer mechanisms. That mechanism has also changed. You don't get to own that infrastructure for like millions of years. Okay, so secondly, to invest in Africa, you have to be dedicated. To invest in the new Africa, you have to be dedicated, right? So in spite of uncertainties, and you have to also care about the domestic government goals, right? And then finally, something that I think is extremely important, is that it was competitive. I think that's where some of these people left. It was competitive, very competitive. Because guess what? When you come in, you have to contend with China, right? And you have to contend with China. And I have to contend with China. And you know, when we talk about China, people talk about China like China just flew in from space. China has been doing business with Africa. Do you remember the history I just gave you? So China is not new to Africa. So they understand the need for trade and how important trade is. And I believe that that's why they're successful. Now, China has all kinds of interesting shenanigans that they play when it comes to commerce, right? Whether they're a capitalistic country or or not. So it's interesting what they do with state money. But the point is, they've been doing business with Africa. The second part is the Nordic countries have also created their African niche. So depending on whether you like the DFIs or you don't like the DFIs, they created a mechanism with a social conscience, right? And they've taken that niche. So it's, you compete with one or the other, or you right-size your investment to what Africa needs. So I believe that many of those guys fled because Africa was tough. Was Africa tough? If you want to get married to her, you have to be Africa tough, right? So to successfully engage in Africa today, private capital must be right-sized, private capital must be patient, it must be resilient, and it must be contextualized, right? And the thing is, it also has to have the necessary ingredients of hand-holding, mentorship, right? And have longer-term support that creates sustainability. That's what we're saying. It's not the same type of capital that we have here that you just export to the continent. It's an Africa tough capital. And I think, you know, part of that fleeing to me was positive because you know what it did? It really started forcing Africa to develop its ecosystem more robustly. Because to attract investors, you have to have a viable ecosystem. So see what just happened recently. Tech hubs rose 40% from 2018 to 2019. In 2019, there were 442 in 2018. Today, there's 619, right? 85 are in Nigeria, 40 are in Lagos. Right. So you can see that people didn't shrink away. Instead, they started working harder to create ecosystems that would support the technology, the partners that they would have in the future. Microsoft is investing $100 million to open 2 tech hubs in Kenya and Nigeria, and Facebook has done some tech partnerships in Jos, in Abuja. So now that the gold rush is over,
no gold.
We're seeing better quality. African companies are beginning to emerge, and they have to get their fundamentals right? They have to engage smaller private equity and VCs, and those guys are selected, so they're having to work harder, so you're getting better quality. And I think one thing I want to mention is, I think this whole thing around the 4th industrial revolution is waking all of us up. Because the 4th industrial revolution is really an application revolution. Because it's talking about how do we take knowledge and technology and convert it to serve the human needs. So, you know, we throw out things like AI, artificial intelligence. I was working with AI when I was in my master's. I'm pretty old, so it's a long time ago. Neural networks, right? So we talk about AI, AR, VR, augmented reality, virtual reality, IoT, right? Which is just using internet to connect everything. Or what I talked about, IDLT, blockchain, right? But it's using then, of course, robotics, mechatronics. It's using all this technology and saying, how do they serve the human? I think of it very similar to what happened in the Renaissance. But the thing, though, is that anyone who does not participate is in trouble. So I honestly believe that where we're going, quite honestly, the divide between poor and rich is about access to information, period. Because you know what? Anything I don't need, I don't know, I go on the internet, I take a MOOC. I teach physics. I'm a physics major. When I don't remember something, my son tries to test me. I'll just go string theory, check me out in 30 minutes. I'll go study string theory, and then I'll tell him about string theory. So everything is accessible if you have access to information. And the way information is right now is, if you can access it, then you can learn it. If you can learn it, you can do it. If you can do it, you own it. It doesn't matter who made it. You can own it. So that's what information and technology is doing for us. So in this patient capital, what do we actually need? We need smaller funds that are conceptually and contextually that will support African investment needs, right? And then the areas of need, agro, tech access, and venture capital sectors. And I'm using venture capital loosely as people who support real early stage startups. So I'm talking of early stage startups versus SMEs. So with a population growth that will be dominated by the young by 2025, and some put it at 70%, Africa must be focused on investments that yield work or job creation engines. And I like the way that Cordell put it. Sometimes we try to say impact versus impact. Job creation is really what we must do. So investors that can support that is really important. So let me just quickly finish. The fact is that of African development, a social conscience has to be part of it as the nature of Africa. There has to be a social conscience, because the biggest thing Africa needs is job creation. We're going to have a bunch of young people, and they have to have jobs, or else. And I'm not going to go to or else, but they must have jobs, right? And I believe that these VCs, these smaller private equities, are willing to invest in applied technology to agriculture, to education, to capital democratization, that's where we talk about fintech, right? They're essentially working on sectors that naturally possess a social conscience without being called an impact fund. So the kind of sectors that you get to work with are sectors that produce what we want. So you see how that merging is so beautiful when you have the right size capital, when you're willing to do the hand-holding, you're willing to understand the context of what's needed. Do we need an equity type of fund? Does it need to be more of debt financing? When you can get in the trenches and understand what the need is, it changes the way that you do that investment, because what you're looking for is outcome. And the beautiful thing is that the sectors that need this engagement are sectors that will solve the social problems that Africa has. So when you do it right, things actually do come together. So I'm going to say, this is my last paragraph, 1 minute. So ladies and gentlemen, I want to just finish by presenting to you a few of these private sector investments. The few, the brave, the Africa Strong investors. Many of them are actually homegrown and diaspora. And they deserve your applause. I'm going to call them out and I want all of you to applause these guys. Gold Venture Capital, Fusion Capital, E-Ventures, Matamba and Nanoko, Jakanda Partners, Adlevo, Sawara, Avalari. I'm going to put us in as a plug. Trans-Sahara Investment Corporation, Africa Cathay Innovation Fund, the Main One Cable Development Team, that is a conglomerate of both international and local ventures. These are characteristics of good investment strategies who have taken the time to understand the market they're trying to get into, and to understand the needs of that market, and to become partners, not just financial providers, but partners to create the Africa that must become. Thank you so much for having me.
So guys, originally we were going to open it up for a 20-minute conversation, but if you look at the time, unfortunately that won't suffice. So I had a couple of questions as the moderator prepared. Just to be time sensitive, I'm going to condense all of that and actually open it up to the audience and let you guide this conversation, because I think it will be more fruitful. And we're only going to take, and this is due to time, I'm sorry guys, we're only going to take 2 questions.
So if you do have one burning one that you think is pivotal and everybody will grow, please ask it. We're going to open it up to 2 questions, pass it on to Ngozi to answer, and then I'll close off the program. Sounds good? Oh, we've got a couple of questions. Okay, so let's do Ella, we're going to do Ben, and the lovely lady at the back. Anybody else want to shoot their shot? Okay.
Thank you so much for the knowledge meeting. I just wanted to know what your take is on our Agenda 2063, and if you think if there's any changes that you would make to that, and if you think they're on the right track, and what the youth can do to make sure that we do meet Agenda 2063.
Mine is, so most of the crucial industries in Africa, like health and power, most companies in there, they're state-owned. So mine is, what's the trend in privatization of such companies, and what are the benefits if you're able to privatize most state-owned companies?
Okay.
So hi everyone. My name is Olayinka Masha. Thank you so much, Ngozi. This has been such a phenomenal talk that you did. It was really incredible. Very insightful and very practical and very solution oriented. So I represent a client in Nigeria. I'm a lawyer. And I represent a client in Nigeria that wishes to invest substantial amount of money in a renewable energy project. So the company is based in America, but wants to invest in Lagos, particularly Lagos-Badagry Expressway. So my client acquired land there, so we're looking for funding or partnerships or collaboration to actually construct an industrial park. Part of the property or the land will be designated to renewable energy. So I wondered, what contacts there are in Lagos available other than the American Embassy. We don't want to do that. So we want to deal with the locals in Lagos.
Okay. So I'll start with your question with respect to renewables, and so there is a tech hub in Abuja, and if you contact me, I will likely give you the name, Dr. Shino, yes. So he's very connected with that, and what they're really focused in is around renewables. So I think it's good that you're partnered. And I want to say something about that model, because someone had said to me, why are you in the US and your fund is Africa facing? So the way our fund is, there are 2 partners here in the US and 2 on ground in the continent. And the reason why it's important that we're here is that there are a lot of family houses and a lot of investment funds, right? Fund of funds and hedge funds that are very interested in the continent, but they're afraid because of many of the things I talked about. So having a partner like us, someone that is here, understands how the mindset to Africa here, and also understands the African mindset, becomes an important bridge. So we can do all the due diligence, we can do all the analytics for them and do the connection. So I think what you're doing is extremely important. The other question I think was about youth, and if I don't answer it properly, just re-ask it. I think that the youth have a very important role to play. So I'll give you one example. There's this initiative in Africa that is called the Young African Farmers. It's thousands of farmers, and I know someone said, oh, not farming and all that. Agriculture is the #1 thing we have to tackle. Because if you can't put foods on the table, it's a non-starter. So, and making it cheap and accessible is crucial. And of course, agriculture has all kinds of, the whole logistics and supply chain is huge. But these young African farmers, they're doing something really interesting. They're working with different hubs where they can do on-ground manufacturing, so it reduces the cost of logistics. So now, young people, if you want to participate in investing, you can invest into a local hub. You don't have to invest in the whole supply chain, and that becomes prohibitive. So you can put together your own money, sort of like a small angel fund, and you can participate in them. In fact, one of the guys is coming over, he's in the US on Friday, which is today, to bring the rice that they've packaged. Their quality is amazing, and quite honestly, one of the things that Africa and Nigeria in particular is very good at is packaging. Our packaging is beautiful. It's expensive, but it's very well done. So, so you can see how you can triangulate this whole commercial capacity and participate in a subgroup without feeling like you have to be part of this whole big thing or you can't do anything. So I really encourage young people, you can put a few of your friends together, put together $20,000, $30,000 and be able to invest in just a hub of a manufacturing hub, right? And then they come work in the US with off-takers and the rest of the supply chain. So there are models that are coming up that are more Africa-centric. So instead of solving the whole problem, they're like, we can do a small hub here, do a small hub in the other place, so that all those who are part of that supply chain, the logistics is a lot less complicated and is a lot cheaper, right? I think there was another question on health and power. You asked the question.
Yeah, mine is about the trend in privatization of some stadiums.
Oh, yes. Oh, absolutely. That is I think, many of the federal governments across the continent, they have issues and we all know that. But I think one thing they're beginning to realize is that the only way that success comes is when the private sector is allowed to function optimally. So many of the parastatals are actually privatizing those parastatals. So if you're doing anything like renewable in Nigeria, for example, it's all, most of the initiatives there are either public-private partnerships or private investors that are participating. So it's not, you're not coming to an environment where they don't understand that. It's an environment where they're already practicing it. So that's really the trend going forward. Does that answer your question, or was there something else you wanted to know?
Yeah, that's
Okay.
All right, guys, and with that, I'm actually gonna ask you to stay there. You're not asking the speakers to come up, but before I do, I just wanted to say thank you so much to everybody who attended today. Thank you to everybody who was instrumental in making this whole day a success, from Pam to Ishwani, who were my brainstorming partners, to Chinwe, who I was like, I'm losing my head, I don't know what to do, how do I actually organize this? To Sahil, who's consistently there, helping with the small ideas and making sure that everybody came together. More than anybody else though is Jay. Thank you so much for listening to me with just an idea and helping this come to life. Thank you to all the speakers who are able to give us their time. Some of them operate out on the African continent, so them coming here today is just not a, hey, I'm going to drive an hour and I'm going to see you, but they're actually flying in and giving us their time today. And we are really, really immensely indebted to you. Can you please come up, Odell, can you come up, Victor, and can you come up, Ngozi as well? I'd like to say thank you to you guys and offer you just a little bit.